Hello, everybody. Welcome back to Policy for Normal People. I'm your host, Christy Amata. It is great to welcome back after a little bit of a hiatus for a couple of months, my good friend Marcus Sturdivant Sr. of the ABC Squared. He's going to run down some market updates for us, and there is a lot of activity in the markets. It is tough to keep up. We're getting a fresh read on inflation and income, economic growth. We've got investors interested in the NVIDIA report earnings coming out tonight. Some say that may be a referendum on the AI boom. Bond yields remain elevated. Inflation is still stubborn. Our new Federal Reserve Chair as of May 22nd, I think, Kevin Warsh, is headed to Jackson Hole later this week. So lots of activity. So Marcus, great to have you on again. Welcome.
Hey, thanks for having me on again, Christy. Great to be on.
Yeah, I love to have you on each time. As I told everybody, we been a little bit of a while. We started out with a little monthly update, but you've been a busy man. You are all over the internet, LinkedIn. Folks, you need to, if you want to follow Marcus, tell us how best to do that. I know I see you on LinkedIn, but you've got other channels too. Tell us how to do that.
Yeah, LinkedIn, YouTube, I have a podcast, Main Street Meets Wall Street. I'll tell them all that at the end. I'll
Yeah,
tell them
sounds
what's
good.
happening right now.
Sounds good. Sounds good. All right, let's jump right in. So Marcus, most Americans aren't sitting at a trading desk every day. Let's talk about things like mortgages, rents, buying groceries, inflation. What is the overall health of that situation for Main Street as you see it right now?
Well, I guess it kind of depends on where you're at, right? Let me ask you a question real quick. Is it partially cloudy or partially sunny?
Yeah, that can change hour to hour, right? That's kind of how the market is, I guess.
What's the difference?
What is the difference? Well, it depends on to what degree each of those makes you happy or not, right? Or how that's affecting your day-to-day life. So why don't we do this? Before we get into too many heavy numbers, let's just take a look at the overall economy and markets right now. Let me ask this. What's the most important thing happening for the average household right now? Worrying about more mortgage rates and how that's affected by the bond market. What's going on in the bond market right now?
Gotcha. So we'll talk about the bond market. Yeah. And just to finish saying whether it's cloudy or partially sunny, I personally don't know the difference. And I think that goes into where we're at in the market right now. We're at a K-shaped economy, regardless of what you may hear from the government right now. So it looks different regardless of where you're at, right? Like some top part of the economy is definitely feeling the wealth effect with 60%, only 60% of the economy having stocks right now, 40% not even being invested inside the stock market. When you specifically, so that's partially cloudy for some, partially sunny for some. Where you're at on the K, it may be fully sunny, and it may be a hurricane, depending on if you're at the bottom of that scale or the bottom of the K. With bonds right now, there's been a lot of interesting things happening inside the bond market. The bond market is woken up. There's been a lot of moves inside the bond market, but what we'll notice with the bond market is since we've spoken, the bond market's peaked. I think its high was the end of July. And when I speak of bonds, I'm talking about the 10-year bond. So 10-year treasury note, that's usually a benchmark most people are measuring. And that thing's been range bound 4 to under 5%. 5% is the level to watch for the 10-year bond.
How is in your view, how is the now $40 trillion debt, how is that affecting the things that you were just talking about?
Well, the debt is key, and the bond market controls that even more so than stocks and the wealth effect. The bond market is global. Even with U.S. treasuries, U.S. dollar sets a lot of people borrow off the dollar. That's the international currency, quote unquote. There's a lot going on side with the yen carry trade. We'll talk about that a little bit later. But as far as it ties to mortgages, and this once again ties back more to the bottom side of the K, because if you're and it does matter if you're on the upper side, you're buying real estate that is really expensive. But the rate that you finance these homes, it matters a lot more, because if you are on the upper side of the K, you could buy some of these things cash. We've seen a move to where people are buying homes cash, so you're not paying any interest on that, or you're self-financing it through a bank somewhere in a different type of loan, where if you're wealthy enough that it won't particularly impact you. But for people on Main Street, everyone was expecting, when you listen to the quote unquote experts at the beginning of the year, for mortgage rates to go down, interest rates to go down, to have all these cuts so far, the Federal Reserve to do all these different things. And if you look at the mortgage rates, they've gone up closer to 7%, almost to 7% for the 30 years. So that definitely is impacting Main Street. And we see that reflected with, if you look at recent surveys, and there's a lot that goes inside the stat I'm about to say, like nearly 50%. Last year, at some point nearly 50% of adults under like 30 years old lived at home with their parents at some point. And some of those are people who are building homes and living at home, but a lot of it is just people are afraid to go out and buy houses. But the mortgage rates we're at right now are not historically high.
Gotcha. Yeah. Well, I can relate to that. I mean, my husband and I have been watching the housing market for quite some time because we want to buy a house ourselves at some point, but the volatility that we see in terms of the rates and then depending upon where we want to be when we buy, right? Because we live in one of the most expensive parts of the country in the DC metro area, so it's even more of a squeeze because we've got to fight high prices at the grocery store and lots of other places. What is that outlook? Has that gotten any better? As you said, the higher part of the Wall Street height of, I guess, the health of the market is going strong, but for Main Street, people with their everyday expenses, groceries, even trying to medical care, that kind of stuff. What are we seeing there? Is it getting any better or worse or about the same?
So inflation has been anchored. It's nowhere near the target that Chairman Warsh or Chairman Powell said, 2%. We have not been there. One thing you didn't mention as one of the biggest reasons we've seen inflation move, we saw some inflation spikes, is oil. So since the beginning of the war, I think, and the war, we haven't met since the war started on February 28th. So since it
Right.
started, oil prices shot up. We saw inflation go up above 6% in one of those reports. Then we've seen it come back down. I think the PC report today was like 3.6, 3.5, somewhere in that range. But like I said, so with inflation, you see inflation move, you see inflation come down. What Main Street, so Main Street, here you have it. You have CPI, that's what you pay, consumer price index. You have PPI, that's what producers or wholesalers pay. So that's what the people we buy from pay, and then you have the PCE, so personal consumption expenditures. That's a mix of all that. That's what the Fed usually uses as their gauge. Chairman Warsh may change that. He has task force going forward. But inflation is interesting, especially the way they report it to people, because they'll have core, they'll have headline inflation. But when you go to the store, you don't separate your dollars or your paycheck into whether this is core or headline inflation. You just feel the inflation.
Right. Yeah, that's an important point that you just made there. How things get measured at the Fed in the government doesn't always reflect what the reality is for Main Street when they're trying to make their purchases and get what they need day to day. And sometimes it's kind of like the labor market. And we've talked about this before. How the numbers are looked at and what actually gets reported versus what doesn't, or can tend to fall through the cracks. Let's you mentioned Chairman Warsh. Let's talk about that a little bit because we haven't met since he took over from Jerome Powell, and I'm curious what differences do you see in his approach at the Federal Reserve versus Powell?
Yeah, so definitely some noticeable differences between them two. Communication styles is one big thing. I wanted to say one more thing on the inflation.
Sure.
So inflation also stand with the K-shaped economy. Those things are definitely more, they impact people who are earning less more, right? So they're regressive. Because if you're spending more on transportation, you only have a certain amount of money. You're spending more on oil, you're spending more on gas, you're spending more on everything. You're cutting back somewhere else, right? Or you're cutting back on food, where are you cutting back? So there's always a certain amount of money inside of every household. Just wanted to point that out, that it definitely impacts people differently based on your income level. But to speak about Warsh and to speak about Chairman Powell, the differences in style. So Warsh has had two meetings, listened to them both, a couple times. I love listening to Fed chairman meetings. And yeah,
That's your thing, man.
yeah, I enjoy him. His first one, I think his speech was like 8 minutes, like his actual commentary, and then he took questions, which is very short compared to what Jerome Powell would do. And then his second one, which was market moving in a different way, like it moved the markets down as he was speaking, it had an effect on the bond market. So it all ties back in there. He points out that he wants less communication from the Fed and Fed governors. So, and he said that he wants the markets to actually like find their own footing. The markets actually work off of the numbers and function, not so much of what the Fed speak is saying into the markets, which is a little bit different than what Jerome Powell did. Jerome Powell introduced the system that we're currently on, where you have these meetings, where you have press conferences after every meeting. So that was something that came with COVID. I believe he started with COVID when they started raising rates, so they had to lower rates first, where they had to lower rates and they had to communicate more with the investment community and to people in the world. So that was a thing that they've always had meetings, but they didn't have as many. There's not a certain amount that you have to have. I think we're currently at 8. Warsh is looking at possibly reducing it down to, I think the Constitution or whatever setup he has it at 6. So that's something that they could change next year. That would be a difference. One thing, like I said, really communication, like the amount of communication coming out of it. Another thing is if you listen to Chairman Warsh when he spoke at his press conferences, he didn't really give very like clear answers. He gave very vague answers. People were like throwing him softball questions, and he just kind of wasn't answering them. So I also think that's part of his communication style. I think he wants to be vague. He's not going to go too deep into his reasoning yet. He mentioned the task force. He has the 5 task force that he's bringing on to look at the Fed's inflation target, communication, some of the other things, reports that they use, some of the metrics they use. Some of those task forces will be wrapped up around the end of the year. So people have asked him about that. He should give more clarity on that by the end of the year. But just in general, the lack of the change in communication is a big thing to the market when it comes from Warsh to Powell. And that's not even getting into like the actual policies.
That is interesting. As you're speaking, I'm trying to kind of wrap my head around how I feel about all that because in one respect, and you said this, even as he speaks, it affects investors and what they do. It affects the activity. It's kind of in real time, right? Based on what he's saying, changes in the market can happen that fast. That could have a potentially a positive or even impromptu kind of effect. But then on the other hand, I'm wondering is the style of communication going to result in a lack of transparency, where we don't have enough information that's clear going forward? I don't know. I don't know if you have an opinion on that or if it's going to if it's really too early to tell in his tenure. Maybe it's kind of just a wait and see. But do you have any thoughts on the value of the communication or its good and bad effects?
Well, if you're a person who values communication, if you're a person who like pays attention to a lot of this stuff, yeah, the more information available, the better. Another thing that they're looking at is reducing the amount of time that companies have to report from quarterly down to 2 times a year, semi-annually. So they were looking at that biannually is every 2 years, right? So yeah,
Right.
they're looking to make it where you only report 2 times a year. Also inside that, Chairman Warsh versus Chairman Powell when it comes to no, we were speaking about markets and market movements when he speaks, right?
Right.
So a couple
Right.
things. Here you go. Here you go to all the policies for normal people listen. Here are a couple of things that I personally like to do or personally like to look at. So the Fed announces their decision at 2 o'clock, right? And then the chairman speaks at 2:30. Personally, I'm never trading in those 30 minutes. Like there's just too much nonsense. You might not even need to trade or invest for the rest of that day, depending on what happens, because there's a lot of nonsense that's happened with that trade. Algorithms are kicking off versus things that are said versus actual information. There's a lot of money being made at that time as well, but there's a lot of different algorithms kicking in. So try to avoid that time if you can, unless you're actually paying attention. You're like an investor and a trader who's actively trading this stuff all the time. Another time to be really out to pay particular attention to when you're trading is right when the market opens. So when the market opens at 9:30, in between 9:30 and 10, you'll often see like volatility in the market. Part of the reason is that the European markets are closing. So those markets are closing down as our markets are opening up. You have a lot of things shifting and moving. Sometimes you'll see the market is down a lot when it first opens and it'll end up being up at the end of the day or up when it first opens and it ends up being down. Like, so check around 10:30 to see kind of where the market's moving that day. So those are two little free tips from Main Street right there, from Main Street to the normal people out here on policy for normal people. And yeah, Warsh versus Powell. Just so I think once the markets adjust to his communication style, because there are a lot of people pay a lot of money to understand this stuff, even without Fed communication. Like I said, before Jerome Powell, this amount of communication was not available. So there are people who know how to operate and navigate without this information. Then you also have avenues. So you talk about Chairman Powell or Chairman Warsh and his communication. You have the president of the United States and his administration offering access to posts early for like $100,000. So that's a different type of information that has nothing to do with Chairman Powell. And that's definitely affecting the top part of the cake because who can afford that? Like small time companies can afford that access. So
Right.
those are the type of things where the administration or the Federal Reserve can move the market.
Yeah. I mean, again, like, I thank you for all that. That's great for our listeners. Those tips, really appreciate that. And folks, just to reiterate, Marcus does a great community service to the public in general. In addition to being a financial services advisor, he offers plenty of free advice on his YouTube channel and across many social media channels all the time. So following him, you'll learn a lot and you'll learn things about Main Street that affect you that you're not necessarily going to hear in the kind of highbrow talk that goes on in the Fed meetings, of course, and the policy speak and things like that. So it sounds like Warsh is taking more of a politician's approach where we don't answer questions.
Well, I guess it depends on the politician.
Right, right. Well, I have yet to meet one who actually answers this question straight on. Yeah, they're good at redirecting or answering the question with a question. But let's hope that's not getting translated into a Fed approach methodology. But in any case, so Warsh heads to Jackson Hole later this week. Anything particular that we're looking for there? I assume we're going to be concerned about how the Fed is going to deal with inflation and interest rates ongoing, as we've been somewhat discussing already.
Yeah, so Jackson Hole is historically, so it's not like an official Fed meeting where they
Okay.
will change interest rates per se, but the Fed could come out and change interest rates at any time. They come out and say we're having a special meeting if we need to change rates and make a move. That would be terrible for the markets. That initial reaction would be bad if they just did something unexpected, which is another thing with Warsh. Like part of his thing is his message, and the markets are looking for his message. So they usually take Jackson Hole with a chance to go out and just kind of send out what they want to do to the market, send out their messaging as far as what they're looking for, interest rates, Fed, what the Fed's going to do. His vision, this is kind of a chance for him to go out and give himself flowers, I guess, but also let the market know what we're seeing and what we're thinking. Another thing to note when he was speaking last time, so the bond market moved.
Hmm.
Bond yields start going up. So bonds start increasing. And that's a sign, regardless of what the chairman may say, that you can only jawbone the economy for so long. So it's another chance for him to jawbone the economy if he's not going to change rates. But you can see the interest rates on the long end going up and moving. And we also saw Treasury Secretary Besson intervene. That's a much longer podcast conversation with buybacks, with the yen carry intervention a few weeks before that. So when he goes into Jackson Hole, this will be a chance for Warsh to set some of the things straight. He's got PCE out the way already. NVIDIA earnings will be out. He won't say anything about NVIDIA. I don't think
Yeah.
that's not really what the Fed generally talks about, but he is a trader. I mean, he's made plenty of money trading. Like that's part of what he does. So they definitely pay attention. That's part of the administration's focus too, as well. They definitely pay attention to the stock market. So it'll just be interesting to hear what he has to say because the room is giving him plenty of chance to breathe and say what he has to say. The markets and everyone, like the globe, wants to hear what he has to say at Jackson Hole. So it'll be interesting for him to address. He'll have to address the Fed minutes, which came out since the last time they spoke, where they
Mhm.
had more concerns for dissents. He'll have to address whether or not interest rates will be increased. For like the last 20 or 30 years, every Fed chair, when they first came in, have had to raise rates. Like their first move has initially been up. And like what the possible backlash would be from that, I'm sure people ask him about that. I don't know if he'll give you answers to these things, but that's just some of the questions that people should be asking Chairman Walsh.
Thank you. And remind us, just give us sort of a refresher. He's been in since May, late May. What has he done in terms of rate changes so far?
There have been no rate changes. They haven't changed rates
Okay.
since Powell.
I
They've
didn't
been on
think so,
pause.
but I I wanted to check in with the expert here. Like I say, I don't follow this every day, and that's what this show is for people like me who just want to understand things that they don't necessarily have time to follow in detail every day. So it sounds like it would be interesting to hear what he's got to say, if in fact he's specific later in the week. So you mentioned NVIDIA. I mentioned it earlier in the show. So we've talked about AI and its influence on the markets some before in this show. I certainly have talked about it with other guests, even previous guests I had on just before this show. Marcus Benjamin Rifkin, who's a SEO website graphic designer company with Snowdrift Co. out in Colorado. A very knowledgeable person about AI and where it's headed, and we talked an awful lot about how rising tensions over the build out that, of course, the supply side of IA that's driving for more energy demand is causing the data center build out too. Where are we in terms of market activity and investor nervousness or feeling secure about the ongoing drive to accommodate AI's needs, if you will? I'm curious about the investing side of that because there's been a lot of pushback. We saw in the Wall Street Journal just a week or so ago a huge article where a couple of senior ladies had big farm and they were approached to sell their land for the purpose of building data centers. Quite a bit of acreage. I forget how much. They turned that offer down. There's a lot of sensitivity, a lot of legacy tied to the land, lots of cultural concerns among people. But I think there's a lot of misunderstanding too on both sides, but lack of transparency sometimes by companies trying to rapidly build out and come into communities without necessarily engaging those residents like they should. Policymakers is running to catch up with the education around AI. So all of that sort of swirling around. On the investing side, is the friction that's continuing to happen at the local level affecting investors being a little more wary of AI or not? What do you see?
Yeah, actually, so I saw that story as well. I think those sisters, a big part of it was their faith. Also, they didn't want to sell
Absolutely,
out
yeah.
due to
There's
their
a
faith. But
cultural, yeah.
so inside the AI build out, right? And you write NIMBY, not in my backyard. You have to think back to maybe like the cell phone towers, right? They were when people were building out cell phone towers and they didn't want to have them built out. We're old enough to remember that, right? Because of
Mhm.
all the radiation, all the stuff that was going to come out, the way it was going to destroy the globe, destroy the country, destroy local communities, and eventually, I think the federal government had to intervene. Those cell phone towers got built. These data centers will get built eventually somewhere, somehow, in an amount of time. And the investment for these data centers are ridiculous, right? The amount of money that it takes to build them. Will they overspend? They may have already overspent, but they're
Right.
continuing to invest inside data centers, right? And people are looking to see the return on investment from data centers and the actual use of AI now. I mentioned on the podcast that with companies and earnings, the buzzword was AI for a while. You say AI, your company, it goes up. Now it's tokens, tokenization, right? People are looking to see how many tokens you're using, how much tokens you're using, tokenization. How are you using these tokens? Are you using this token to check the weather down the street, partially cloudy, partially sunny? That's probably a waste of that token, right? For your AI use. How are you getting usage? So they want to see the usage from the AI. I want to actually ask you a question about AI and like because it ties into investing, but it also ties into what you do as a writer, right? So Stanley Druckenmiller, and it ties into exactly what we're talking about. He wrote an article, and I think it was in the Wall Street Journal, the other day about Secretary Bessent's intervention into the bond market, the announcement last week where he
Mhm.
said it was going to come into, and then Bessent made a statement maybe Monday. And Druckenmiller went there. He said it's not a good move. He doesn't think it's the proper move at the proper time. There's not a lot of things that are showing this to happen. Now, Bessent, mind you, that Bessent, Druckenmiller, and Warsh are all from like the same school. Like Bessent and Druckenmiller, like that's his protege. Like they work together, whatever that level may be.
Mhm.
So he came out, he made a statement about it. But the question that I asked you is that it came back today that pretty much the whole article was written by AI. And he was just like, well, yeah, the article was written by AI, but he's an expert in what he does. How do journalists feel about that? Like he's an expert, so he has the facts, but he's just letting AI write the article for.
Yeah, it's a great question. So, and I have talked to people about this a lot, and in my own writing, I use AI kind of as a co-editor and things like that. Ultimately, I do my own writing, but I certainly utilize its efficiency. I know others do too. I think in the world of PR journalism and so I think the bottom line is that any major innovation, especially where it involves multiple layers of anything from more land use, more energy use, changes in cultural norms and in local communities. You're always going to have friction when these things come about. And I think the important thing is bring everybody to the table and make sure that we're all well informed, that everything is transparent. I think the big mistake that companies made was not doing so in the beginning. We should learn from history. But I also think that residents and your Main Street folks need to make sure that you got the facts and get educated. And policymakers have probably the most responsibility in some cases. They need to bring everybody to the table because they're the ones that are going to have to decide where the boundaries and the limitations are.
Yep. And as far as one of our things, I'm a little bit further south than you. Not much though. You're in Virginia. I'm in North Carolina. Whilst you're south, Charlotte, North Carolina, one of the things like you don't have to explain your reason why you don't want it in your backyard. Not you particularly, but people in general. Whatever. That's your property, your rights, whatever. You
Yep.
don't have to. I don't even need the public debate. Whatever. If you don't want it, you don't want it. But like I said, eventually the government will find a way to. They're going if there's a need for it, and we see, especially like China's building a bunch of data centers, or we're starting to lose out on AI race because of data centers. Data centers will get built. So we'll see where they're at in like 5 years. The AI investment towards data centers will continue to grow. You saw you were speaking on the watermarks that they may add soon. There
Yeah.
was a college professor who went viral because on his exam he put a watermark in there that you can only he put a watermark in there that wouldn't be detected by AI, and it was something like leave the test blank or something. If you didn't use AI, but everyone used AI, so like all his students failed the test because he
All that.
saw that they all used that. Yeah. But back to NVIDIA, that's where we started, NVIDIA and
That's
earnings,
right.
right? So, and the AI build out. So with NVIDIA earnings, I expect NVIDIA to have strong earnings as they have every time. NVIDIA has this tendency of like going into earnings, like, which is a little bit different this time. They go into earnings with their like price going up. So going up into earnings, or the prices going up in the earnings, and they will report a strong quarter. Jensen Huang is like the most optimistic AI build I got in the history of AI. Like he's so optimistic about it. He'll come out and say some really optimistic things, great numbers, great growth. And then the next day, and the next few weeks, the stock will begin to sell off. So that's just seems to be the trend with NVIDIA, because people are always like, what more can they do? How much? And that is true, because they've had some extreme like growth numbers, and just like the law of large numbers is not quite the law of large numbers, but
Yeah, it's
you can only
insane.
have so much growth at a certain level for so long.
Right.
Now, how NVIDIA could impact, but NVIDIA doesn't move the market like that anymore. Like when NVIDIA earnings come out, it doesn't really move the market anymore. NVIDIA hasn't moved the market for like the last year. I don't know if people watch and notice, but the markets continue to go at all-time highs. But NVIDIA doesn't continue to reach all-time highs. And NVIDIA has been up, NVIDIA has been down. The Mag 7 in general, which was like 40% of nearly 40% of the concentration of the S&P. Earlier this year, that concentration has come down. Now, I think I said that with you earlier when we were speaking about one of these meetings a few months ago, that would happen. So to make like an impact from Jensen Huang, it would be in the commentary. He'd have to come out and say something like, "We overspent. The circle of investing is real." Like something detrimental to the AI case. If he's not like extremely optimistic, then you can see Nvidia like make the market move down.
Yeah, yeah, and I know we did talk about that, some time ago, and you're right. I mean, I if you for those who are watching the regular reports, it hasn't been a major market mover, and of course, there's a lot of supply side productivity too going on here. It's not just a few 3 or 4 companies, just because they get mentioned a lot. There's a lot happening in the market space with stocks that are related to this build out in some way or another. So that it really touches a lot of it. One thing that I always think about when you see public debates or tension or discussion over any kind of new innovation and its impact on society, I'm always curious whether this is not a question; it's more just a thought. But I think it's something that I'm sure you probably try to advise people on, but I wonder how many people out there that say no to data centers, for instance, just to take one of many possible examples. If they look, are they looking in their 401k? Are they looking in their mutual funds or their investments or their S&P 500? Wherever they're investing, I mean, a lot of these company stocks are part of those bigger packages, so they may be investing in the very thing that they're opposing. I find that kind of fascinating. I don't know if you have any thoughts on that, or if you try to through your financial literacy with people, if you try to bring that into the discussion at all. Do you do that?
What, to tell people that the companies, the largest companies, are already in their portfolio?
No, just to I don't if people are, and this may not really come into a discussion of where people are looking for your financial advice, I don't know. But in I'm just thinking in general that if I were to have a certain feeling about data centers, I don't want them in my backyard. That's the I'm wondering about, do people who feel that way also are they investing in that very product that they are claiming to oppose? How connected are we to the investments that are being managed by someone else on our behalf to really even know that we may be investing in something that we're claiming we don't support? How does our financial lives match our ideologies sometimes? It's really just a something that kind of crosses my mind sometimes, how much people may be paying attention to that. That may not be something you want to get into with your customers, I don't know, but it's just a curiosity.
Yeah, so there are definitely funds and indexes and things that are made just for, yeah, some people don't want to invest in carbon. So do you have clean energy funds? They call it
Yeah.
sustainable investment, but it's not always just clean energy or something like that. Some people don't want tobacco in their portfolio. So you build portfolios with tobacco. Some people don't want international. So yeah, so if it's a person who in general, so this is where like, sorry, AI, this is where you can't beat financial advisors. But if it's a person who is just that person who's more concerned with the data center in their backyard, probably isn't as concerned about the small slither percentage that whatever company is inside of their portfolio and how much it may be growing. Their money's probably not their top concern.
Mhm.
So their ideology, like those faith-based women, probably trumps the dollar effect. They probably won't tell you to take it out, but it's probably a moot point, is what I'm saying. Like that would bring more consternation to a conversation. That's something you should get ahead of before you start. Like, so is there something you don't want to invest in? Like, that's a question you ask someone when you're setting up investments. Like, what don't you want to invest in? Someone may have had a grandfather who died of lung cancer. They don't want to invest in tobacco, or they may have a green energy car. They don't want to invest in oil companies, those type of things. So yeah, that's already built out there. People definitely think about that, I guess, is a different way. I don't know if I mean, few people, unless an advisor comes and tells them, usually people usually aren't changing to those type of portfolios.
Yeah. Yeah, it's just like I said, mainly on my end, it's just a question of intrigue that I sometimes entertain and kind of wonder how much someone's portfolio matches their ideologies, and then that's not easy to manage in all fairness, because a lot of things are packaged in with other things that you do care about. So, and that's the way they come. So kind of going back to this investors in AI, just to sort of wrap that part of the discussion up a little bit. It's been talked about for quite a while. At what point are investors going to want to see a return, right? We've got all this spending, even debt spending into this project. And is there, this is kind of a rhetorical question, but is there a thought to where the road ends on this, or maybe not ends completely, but are we banking on and investing on an indefinite, continual increase in demand for not just AI and the data centers, but as lots of other technologies put pressure on the grid, for instance, just to keep it about energy and keep it kind of in that category? I mean, is there an end in sight where things will have to level off and investors will have to make an adjustment that way? Or are we just expecting that this is going to be a nonstop growth indefinitely?
That's my rhetorical answer. No. So with yeah, I'll give you my answer to that. Something, yeah, everything that has a beginning has an end, right? Everything has a life cycle. So yeah, well, eventually the spending for AI will have to stop. The build out have to stop. Will we overspend? Probably. Are we at that point now? No, I don't think so. When do investors want to see ROI? They want to see parts of it now, and people are starting to see parts of return on investment from AI. I
Okay.
saw an article the other day where someone has a robot in their home, right? We have robots in Amazon factories right now doing the humanoid robots. We see these robots running Olympic races right now, track and field events. So people are seeing it. It's just whether or not that's more for entertainment and high level purpose use. That's not for everyday people down here in North Carolina. So we watch. I cut the cable a long time ago with cable. Cut
Hmm.
the cord.
I did too.
So we get broadcast TV, and one of the channels down here is it shows old cartoons, man. It shows old cartoons like the 50s, 60s, 70s, 80s. And one of the shows is the
Good
Jetsons.
stuff.
And me and the family will watch the Jetsons sometime, and we'll talk about the things that are on there. And it's the
Dating
year then.
ourselves, Marcus, but the Jetsons were awesome.
They were, compared to now, though, just like the different things that they saw with the Jetsons,
Oh
and like to
yeah.
get there. And I'm still with the AI investment, right? Because that's kind of some of the things that we thought we were going to get there, but they have the talking screens, they have the robots inside the house. Like, when do we get to that level from AI investment? That's the kind of things that people want to see. But inside the AI investment and build outside the data centers, where are you seeing the most? I now spoke a little bit earlier with the tokens, where are you getting the most use from the token? That's probably where they're trying to see the return on investment right now, like how efficient people are being with their dollars, where the funding is coming from, like whether it's free cash flow, are you going out into the market and getting debt to fund this AI build out? How much free cash flow are you taking away? Because investors, few people want to see free cash flow decrease if you're investing inside a company, right? But you don't want to see a company take out an extreme amount of debt to build out anything as well. But like I said, it goes back to NVIDIA, and it kind of always goes back to NVIDIA with the AI build out. What's Jensen Huang saying on investment? What's he saying on return on investment? We've heard a lot of other companies already report. So companies that tie back to NVIDIA, Taiwan Semi, Apple, Microsoft, Google, all those companies continue to say they're pouring money into this AI build out. And you see some of the things they're doing, some of the AI improvement that they're putting into headsets and home phones and wearables. So I don't know if that stuff's good for everyone. Like, someone had some Med glasses the other day. I didn't even know. I don't like that. But the return on investment, I just think that we're not at the later stages of this build out. So it'll be a while before you see like the full return, but you can start to see small returns on investment right now. People just are more concerned with where these dollars are being spent. So to answer your question, yes, we will spend too much money, but we're pretty early in my opinion. So maybe like if it's baseball, middle innings.
Yeah, I agree with that. And I think the things like you described, robots and sports and things like that, those are great headline attention grabbers, and they're kind of sensational, and they get the press right now because very futuristic and intriguing. But I think one of the big things that probably would shore up a return on investment with AI in the long run is going to be how much businesses and how fast they integrate it into their processes and systems. And I know that's something in my business that I've started helping customers work on little by little, but steadily increasing. For instance, using AI as your relationship manager or executive assistant. I've got a setup right now, and I'm teaching others how to do this, where you train it with the criteria that you want to see, and you can plug it into your other systems. So you can plug it into CRMs, you can plug it into your calendars, things like that. And then I go in the morning and I say, all right, Chat GPT, give me my morning review. What's on my calendar and what do I need to pay attention to today, without ever opening the calendar, right? So, and that's kind of a basic AI integration. Many things are so much more sophisticated even. And then of course training employees to implement and learn how to use AI in a different kind of creative way, to kind of outsource to AI the sort of menial tasks so they can focus on more creative thinking perhaps and other higher level problem solving skills. So there's a lot yet to be done in terms of businesses' capacity to implement this stuff, to leaders to be educated on it, and then ultimately provide the appropriate training for their employees. So I expect. Do you agree that a lot of the ROI from investing in AI is yet to come, because we're still in the early stages of especially industries truly implementing this in a serious way?
Yeah, I mean, ROI on AI is still so far away to be seen. Well, let's talk about a real life example, something that just happened. So Moderna and Merck had a breakthrough last week with the assistance of AI in one of their, I think it was a cancer treatment that like drove those stocks to like all time highs, record gains for a stock I've seen in like years. Any stock in the market because of the breakthrough. So that's like a real breakthrough that you see right now, that you're seeing right now. Healthcare, that's a big area where you should see impacts from AI and the AI build out immediately. Yeah, as far as like, so a lot of people are using and that ties into also another way that AI is going to really impact cybersecurity, right? You see cybersecurity companies continue to grow because we saw hacks. These AI companies are getting outside their sandboxes. So sandboxes, they generally set up these AI companies, or they set up a program to try to infiltrate something else, but they'll have it inside of a box. Think of a box type thing where they
Yeah.
aren't supposed to get outside. But these AI tools are so smart that they're getting outside these boxes and going outside these guardrails. Hugging Face was one that they were talking about. It got hacked by Anthropic. I believe Anthropic's the one that hacked Hugging Face. Hugging Face is now selling for like $13 billion, or is being put out on the market for like $13 billion. All tied back to the AI, all tied back to the cybersecurity. So this AI build out, it's the return on investment is now, but there will be so much more return on investment from AI. Healthcare is something definitely to watch with AI.
Yeah, for sure, for sure. Well, look, we always do this because it's always a fascinating discussion. There's a lot of stuff I'd still like to cover, but we're at an hour, and I want to respect everybody's time, including our own. But is there anything that you would like to share with Main Street that we haven't covered today as sort of a wrap up conversation or question?
Yeah. So Main Street, find the signal in all this noise, right? Like we spoke about a lot of things, even from just in this show that have happened, right? This episode that we recorded. But if you look at the stock market from the beginning of the year to where the stock market is today, the market's up, right? But if you think about all the things that happen and all the way the world's in, I mean, maybe people thought it was literally, but like SaaS apocalypse, all these different things that were coming in to destroy the stock market, destroy all your wealth. If you just stayed invested, like if you didn't pay attention, if you didn't even know, I'm not saying don't pay attention to your investments, but if you didn't get tied up into it every day and take some of that mental toll into it, your portfolio's up. You just stay invested. Time in the market beats time in the market every time. Example, like I said, Moderna and Merck. Moderna's stock has not done anything for, oh my goodness, years. It went up during COVID with the vaccine. They
Yeah.
came back down. Like
But it
it really
suffered
hadn't
for a
done
while too
anything.
with that mRNA research, and then the return on that was a little slow. So yeah, you're right.
Right. So it was way down. But if you're not in the market and you don't own that, and that stocks and indexes, and you don't own that stock, and then it has that historic move, you miss it. Like, listen to me, normal people. I'm a normal person too, but policy for normal people. Most of the gains in the stock market in the year are made in a few days. Like all the gains are made in certain days, but you have to be invested through those days. So stay invested. Time in the market beats time in the market. watch out for the signal versus the noise. If you see 5% on that 10-year treasury yield, that's a different thing as well. Maybe it's time to get a 10-year bond. We'll see.
Yeah. So, okay. Good advice, Marcus, as always. And folks, please do check out his channels. Marcus, how can people follow you and find you?
Yeah, so you can find me on LinkedIn, Marcus Sturdivant Senior. YouTube channel has the same name. The podcast, Main Street Meets Wall Street podcast. It's so many great conversations going on over there. Over there on the YouTube channel, like I said, I want that to be more like an outlet for people. So anyone looking for anything for financial literacy, I want to cover the whole. I want to be encompassing for people to listen to. So we have Kevin Warsh's speeches on there. We have some earnings calls on there if you want to go and listen to. And some of this stuff is just not even me speaking. It's just for you to listen to. Because this is stuff you need to get into your system. These are terms you need to learn. And then you can comment and ask questions. You have questions about anything you see, or you can just go in there and Google it yourself, either way. But then we also have the interviews that we do and the expert commentary that we bring on. So it's just a lot of stuff going on. So if anyone who's just generally wanting to learn about finances, and I mean from where to start with an emergency fund all the way up to like private credit or whatever you may consider fancy, the channel has it. And the Wall Street South Journal. I think the newsletter over on LinkedIn has over 1,400 subscribers since February.
Excellent. Wonderful. Thank you, Marcus. You provide a wonderful community service nationwide with all the information that you put out on your channels. So it is very educational, and I know I appreciate it, and I certainly encourage our listeners and viewers to check it out as well. Thank you also for following Policy for Normal People. We are also on YouTube, sponsored by My Business Amada Development Services. Find us across Apple, Spotify, Amazon podcasts, and on LinkedIn. So we appreciate your time and hope that you found this conversation as fun and interesting as I know Marcus and I do every time we get together. Marcus, I look forward to the next time as always. In the meantime, be well, and thanks so much.
Yeah, Chrissy, thanks for having me on. Main Street Heart meets Wall Street Smarts for the Main Street folks.
Love it. Great tagline. One of my favorites. Well, all right. We'll see you all later, folks. Have a good week.